Imagine a world where Bitcoin hits 500K. The implications would be staggering. We'd see a massive influx of institutional investment, potentially reshaping the financial landscape. Traditional banks might scramble to adapt, while governments could feel the pressure to regulate or even embrace cryptocurrencies. But what if it doesn't reach that milestone by 2030? We could witness a wave of disillusionment among investors, leading to a market crash that shakes confidence in digital currencies. The worst-case scenario? A return to skepticism, pushing Bitcoin back into the shadows of financial discourse. On the flip side, in a best-case scenario, Bitcoin could become a legitimate store of value, akin to digital gold, driving innovation in blockchain technology and decentralized finance. The future of Bitcoin is uncertain, but one thing is clear: its journey will continue to captivate and challenge us all. Bitcoin reaching 500K is a topic that stirs both excitement and skepticism in the crypto community. To understand if this target is realistic, we need to consider several factors. First, institutional adoption is crucial. Major companies and financial institutions integrating Bitcoin into their portfolios could drive demand significantly. Next, we must look at regulatory developments. A favorable regulatory environment could boost investor confidence and attract more capital into the market. Additionally, the halving events, which reduce the supply of new Bitcoin, historically lead to price surges. Finally, macroeconomic factors play a role. As inflation rises and traditional markets fluctuate, Bitcoin's appeal as a hedge against economic uncertainty could push its value higher. While 500K may seem ambitious, a combination of these elements could make it a reality rather than just hype. Bitcoin hitting 500K is a topic that sparks intense debate. Recent polls show a surprising number of you believe it's possible, driven by factors like institutional adoption and inflation concerns. But let's break it down. Currently, Bitcoin's market cap is around $800 billion. To reach 500K, it would need to soar to a staggering $9 trillion. That's more than gold's market cap. Many argue that as traditional finance integrates with crypto, we could see massive inflows of capital. However, skepticism remains. Regulatory hurdles and market volatility could hinder this ascent. As for 2030, predictions vary widely. Some analysts suggest a range from $100K to $1 million, depending on technological advancements and global economic conditions. What do you think? Is Bitcoin's 500K live potential a realistic target or just a pipe dream? Your insights could shape the conversation. Analyzing Bitcoin price charts reveals a fascinating narrative. Recent trends indicate a potential trajectory towards 500K, driven by key metrics like market capitalization, trading volume, and historical price patterns. The halving events have historically preceded significant price surges, and with the next one on the horizon, we could see a similar effect. Moreover, Bitcoin adoption rates are climbing steadily. Institutional investments are increasing, and retail interest is surging, suggesting a shift towards mass acceptance by 2030. As more companies integrate Bitcoin into their balance sheets and payment systems, we're witnessing a fundamental shift in perception. If we consider the supply-demand dynamics, with only 21 million Bitcoins ever to be mined, scarcity is a powerful driver. Combine that with growing global economic uncertainty, and the case for Bitcoin as a digital gold becomes compelling. The road to 500K isn't just a dream, it's a potential reality shaped by these critical factors. As we approach the possibility of Bitcoin hitting 500K by 2030, it's essential to consider what lies beyond that milestone. Imagine a world where Bitcoin has solidified its status as a global reserve asset, reshaping our financial landscape. With institutional adoption on the rise and regulatory frameworks becoming clearer, Bitcoin could evolve into a cornerstone of wealth preservation and a hedge against inflation. In the decades that follow, we might see Bitcoin integrated into everyday transactions, driving innovation in payment systems and decentralized finance. The potential for smart contracts and blockchain technology to revolutionize industries is immense. As financial analysts, We must prepare for a future where Bitcoin not only serves as a digital gold, but also empowers individuals and businesses alike. The next chapter for Bitcoin could redefine our understanding of value, trust, and economic freedom. The journey is just beginning, and the possibilities are limitless.